All right, everybody. Thanks for joining us today. We are chatting about why the timing for your home purchase in 2026 could be well timed. We're going to chat about, for the most part, the positive trend in the way of more of a leaning towards a buyer's market and what that means to you as a home buyer, the things that you can take advantage of, the time of the year to take into consideration the different times of the year in 2026 and kind of dig into some details of what to consider during the home buying process. So with that, we'll cover all these items here. We'll fast track this fairly quickly. But with that, let me go ahead and bring on a co-host here, Chase Hodgson. How you doing today, Chase?
I'm good, Jerod. How are you?
Yeah, good, good. I'm excited to chat about kind of what we anticipate the next year going forward, and kind of leveraging the trend of the ability for buyers to better negotiate, to get better pricing, to be more likely to buy. And excited to have you on to chat about kind of on the lending side, what you're seeing in the way of, is it going to improve for buyers? Do we think it's not going to improve? And you know, spoiler alert, it's probably going to be a little bit of both depending on what time of the year you jump in.
Right, right, for
So,
sure.
yeah. Well, cool. Well, let's do just a couple small housekeeping items here real quick, and then we'll jump into the meat of the topic here. For those of you that I haven't met, my name is Jerod Lee. I'm the associate broker and team lead here at My Home Connection, also known as MHC Realty. Our sponsor for today is the perfect home buying process that we've been developing now for over 2 decades. Just a lot of tips, tools, resources to help you in the home buying process. As you see here, feel free to reach out to us about any of this information. Most importantly, kind of taking advantage of the no obligation consultation just to kind of chat about where you are. We're going to talk about why it probably makes sense to buy in 2026 for all the reasons, but obviously we would need to know specifics on kind of where you're at, what your goals and objectives are before we really make a strong recommendation one way or another. So, and then, by the way, reach out to us to take advantage of a current promotion of up to $500 on your appraisal on the lending side and up to $500 on your home inspection on the real estate side at closing. So we're going to make sure that you have a high degree of confidence in the home that you're buying and minimize your costs. So with that, let's chat, Chase, a little bit about kind of the trend that we've been seeing on the shift towards more of a buyer's market, which in my now over 20 years of real estate, we haven't had a whole lot of those buyers opportunities. It's predominantly been a fairly strong to a strong seller's market, um, just by virtue of our inventory and demand.
Yeah, I mean, going back, it made that shift probably, what was it, 14 or 15? We had that window after
Mm-hmm.
2008, where you could, it was a buyer's market. And yeah, it was just tough to say. Yeah, all the things went on right then. But other than that, it really has been the early 2000s. And then 14, 15, it just started to take off again, and it's been nothing but crazy. So um, it's been nice. This is the most power I've seen buyers have in a really long time.
Yeah, now let's get into a little detail of what that means, buyers versus sellers market. In our detail in real estate, we talk about the amount of days on market, how quickly inventory is moving, how close it's selling for asking price, whether it's slightly below, at, or above. And those are a lot of details that us real estate agents and lenders look at. But really, it's typically and traditionally stronger for sellers because, especially after the 0809 meltdown, inventory was slow to come online because builders were reluctant to stick their neck out too far, right? I mean, when you get hit that hard, even if you stayed in business, you are not anxious to put a whole lot of inventory out there.
No, there was about
So
a
we've been
10-year
short.
period. Right. Yeah, there was about a 10-year period where they didn't build. And then the market took off and they were behind.
Yep.
And then we had the whole COVID thing, which created another mad rush, and it put us further behind, right? And now a lot of people we've had another small period where people have slowed again, right? And I think that kind of went on a little bit after COVID as well, even though there was, we had that initial where nobody knew what was going to happen. We didn't know it was going to blow up like it did, the real estate market. And so they slowed a little bit more, for a time. And so man, I can't remember the number exactly, but it's millions of homes, right?
That we're
Nationally,
short.
that we're short. Yeah,
Yeah.
for the demand.
Yeah. So that says a couple of things, right? Once there's low inventory, sellers have less competition,
Hmm.
buyers have less to pick from, but we don't see that inventory issue going away anytime soon. Just because even if all the builders jumped on board and said let's create inventory, right? Because you gain inventory by either people selling their homes, which they're not inclined to do because most of them are in fairly aggressive interest rates. So now you got to create brand new inventory, which builders are doing because there's a higher degree of confidence in our market, in
Yeah.
our housing economy, but they're certainly going to be cautious about doing it. So what I'm saying is we've pretty much proven that there's not going to be a crash because there's demand for low inventory. Now, what I'm transitioning to is the timing side of things and the kind of post correction or adjustment, whatever you want to call it. So we didn't have a crash, but after the COVID, um, the well, let me back up. During COVID, our values shot sky high because there was so much demand, so much relocation, and
Not,
people were paying way over asking price. So our values shot way beyond where they should be. So they needed to correct, right? That was not sustainable. So the last 12, 18 months have been kind of this correction because
mhm.
people are not now throwing briefcases of cash around at homes. So it's coming to where it could and should be.
Yeah, yeah. I like the word correction a lot. Like if you drew a trend line, between years and appreciation, right? The real estate appreciation would come up at about a 45-degree, and over time, and then what the market actually does is another line along that, and it pretty much stays along that 45-degree trend line. But then in COVID, we had this big jump up where it was, inflated well above what the normal appreciation would be.
Mm-hmm.
And what we saw after COVID was it really just settled back down to that normal appreciation, trend line.
Yeah.
And so, yeah, we're now back about where we should be, as opposed to, a highly inflated or any kind of crash.
Yeah.
Definitely.
So would you agree with the kind of assessment that we're now not overpriced, but we're also not, underpriced, but for in certain situations in certain markets and maybe some of the older inventory, the distressed inventory? I mean, we're kind of in a weird place because you could
Yeah.
find something and argue that it's overpriced, but then you could find something like, wow, that's a good deal.
Yeah, it is interesting because I feel like, economically speaking, right? Like, my personal opinion, is that we're still probably overpriced in comparison to the wage base in a lot of areas, right? A lot
Oh,
of areas
right.
that increase. Um, but the supply and demand is now currently sustaining values where they're at.
Yeah.
And so it's hard to say that we're overpriced because the market's telling us that that we found some sort of a balance, right?
Yeah. Yeah. Well, the two things let me pull up a screen share here, and I don't do this too often, so bear with me here. But one of the things that I wanted to kind of articulate is that we are in kind of a level market. We're seeing, depending on where you're looking, we're either slightly appreciating or certainly level. So for those that perceive that there's still room to go down, one could argue there are certain areas that the market or the values are going down. Like, for example, certain existing inventory that was placed on the market at the wrong time and not really presented to the market very well. You'll see reductions in price because they're kind of chasing the adjustment or correction that was taking place. But now that inventory is being gobbled up. Does that make sense? So I'm just saying, depending on where you're looking and what you're looking at, you could perceive that the values are going down. But what I'm saying is that you'll also look at some other inventory that's just flying off the shelf. Stuff that's put on more recent, that's presented well, is just gone in days and weeks, kind of back to that very strong market. So what I'm saying is, depending on what you're looking at, you can get mixed signals.
Yeah, yeah, you definitely can. There's to add to that, like there's builders that want to maintain price levels, right? And
Mm-hmm.
so, but if you get detailed about the information, I mean, I've had a couple clients recently that we're talking, less than a week when it's priced right, when it's
Mm-hmm.
priced accordingly. So I think the market is still really good. To your point, the folks that have that 2 or 3% interest rate, those homes aren't going to hit the market again. I know we've talked about that before, which further hurts our inventory. And so I think the trend right now is we still don't have enough. Um, I think I think the reason that we're kind of in this lull is just because of the rates themselves, right? And once they drop below a certain point, I think a lot of our demand comes back, and now we're seeing a shortage, which would, instigate that shift back to a seller's market.
Yeah, well, let's go to those interest rates, but real quick before we do, I did want to show on this graph. So if you look at the over a year ago, the January sold numbers were pretty low, and I'm pointing this out because we're going to address it in a little bit here about seasonality. But you're seeing the sold numbers go up, and the average sold price, obviously going up and down, but generally trending upward. And that's in the whole kind of Treasure Valley here, Meridian, Kuna, Nampa, Idaho.
Mm-hmm.
And I think nationally, a lot of these numbers are similar back to the whole lack of inventory thing. I think these are going to be similar, but we can get into the micro market of kind of where we're at. But I just wanted to give you an example of homes are being sold at a higher volume at a higher price as shown here. So I wanted to give some examples of that. And then what Chase was referring to is kind of what's going on with rates here. I wish I could remember the exact numbers you mentioned in a prior podcast, but essentially it's like every 1% of interest rate reduction, I think you said it was like another couple million buyers going onto the market nationally.
Yeah,
It was a big number.
it's a substantial number. Yeah. Oh, gosh, what was that? I have to go back to my notes to remember exactly. I hate misquoting. So, but yeah, I mean, the amount of buyers that re-enter the market for every 1% drop is definitely going to hurt our inventory.
Well, the important thing to note about that is, and we've talked about this before, but I think it's very important to continue to talk about it, is folks appreciate the fact that interest rates are trending downward, but what you need to take into consideration is what that's doing with demand. Because we just talked about inventory is not picking up super quickly, but demand, the lower the interest rates go, can come on very aggressively.
Mm-hmm.
So if you continue to wait to watch this drop because you think, hey, this is great, I've got more buying power, I can either buy a more higher priced home or get my mortgage down. Well, you and everybody else is of that same opinion. So what's going to happen is, as these continue to drop, which I think most are, and correct me if I'm wrong, Chase, kind of anticipating that as we get deeper into 2026, we're going to see it trend down. I don't know about aggressively, but certainly in that downward direction.
Yeah, there's still a bunch of volatility, around the world. Like obviously, we've got the new, what's going on in Venezuela, and so everybody's watching that because oil's involved, and anytime oil is involved, that literally every market is affected by oil prices, right? So, but the general sentiment by all of the experts is it will continue to trend down, and you can see. Over the last 12 months, it has done that. There's blips where it'll jump back up for a little bit, but the overall trend, has been down and down slowly, which is, I've mentioned before, is realistically what we want. Like everybody'd love to see it drop back into, fives or fours, but then now you're getting back into bidding wars and it's going to drive appreciation, right? So if it slowly comes down, not only does it give builders a chance to help with inventory, but it's also more stable, right? Like volatility, big swings up and down, that's volatility, and that's not, we wouldn't be able to then depend on where rates are, right? The slower they come down, the more stable it is, the more stable our economy is, and we can depend on those rates. And so it creates a better environment. And
Yeah, I think. Go ahead.
to your point on the the builders not being able to keep up. Part of that is the fact that there's homes that will be turned into investment properties, right, because of their low interest rates, and we won't see those hit the market. So that resale market has drastically been affected by COVID.
Yeah.
But the other thing is, when you think about builders, and like you have to think about the process, right? Yeah, it's like, oh, they can build a house in 2 or 3 months. Yep, you're absolutely right, they can. But do they have the lots for it?
Right.
Because you can be talking a minimum of 2 years to bring a development online in order to, right? So it's not like they can just say, oh, hey, we're going to go build a bunch of houses now.
Flip a switch and now we've got a quarter again, half again the inventory. It doesn't work like that.
Right.
Yeah, these are years in development, right? You got to buy the land, bring utilities to the land, you got to make the improvements, you got to, subdivide, the lots, you got to get permits, and it's a long.
Yeah, and like our area alone, right? How many are in moratorium right now because the cities in municipalities don't have sewer and water availability, right?
Yeah.
Like there's a lot that goes into it, and so it's not like you can just say, hey, go build these houses, and in 6 months you have a whole bunch more inventory. Unfortunately, it can't be that easy.
Yeah. Yeah. The one thing I did want to point out to Chase that you might have to speak to here a little bit, and correct me if I'm wrong on any of this, but uh, what I see here and what I hear is this volatility, this up, down, up, down, up, down is more aggressive than we've traditionally seen. Um, for a number of reasons. And I think what I'm trying to point out here is I think what can happen is the buyers get caught up in, well, I just heard yesterday that rates were up, and then I heard the next day that they were down, and which is true. So it creates confusion and frustration, and both are true because of the volatility. But what we need to look at is the overall trend, right? Obviously, the trend here was up, but it was up and down. The trend now is going down, but it's up and down. So on the downward trend, when does it make sense for you as a buyer to get into the market at a lower interest rate before demand, you and everybody else start to buy? Even if the rates continue to go down, that's helpful. But the problem is if values start to go up, that's not a number we can correct, and you've kind of shot yourself in the foot.
Yeah, absolutely. Yeah. So to start off the volatility, like to give a little bit of insight into the rates, when people say, oh, rates were up today, rates were down today, rates change every single day, right? So it's based off of the mortgage-backed security market and the treasuries, right? And so if you think of an interest rate scale, we in the industry we talk about basis points, right? So there's 100 basis points in between, a rate. And so when we say they're down, but it might only be 10 basis points, right? That might have trended down, but it might not be enough to affect the overall interest rate that you get on your loan. Right. So some of those small moves that we see every day doesn't necessarily change your interest rate, but it's what we have to watch, right? And so don't necessarily listen to the news, but talk to an expert to see where it's at, because they're going to say, oh, they were down today. Well, yeah, they moved 10 or 15 basis points, but the interest rates, the overall mortgage rate didn't get affected.
Yeah.
And so understanding that, you need to talk to an expert, first of all. And then as far as timing, and you and I talk about this all the time. If it's time financially for you and your family and you're ready, then it's time to buy, right? If you try to time everything perfectly, and I guarantee you're going to miss out. There's just no way to do that.
Yeah.
There's a lot of volatility in the market. The the appreciation at minimum, right? National average is like 4%. So, on a $500,000 home, you figure at 4%, you want to be paying, $40,000, $50,000 more, $20,000 more, right? In a few months.
Right.
And the minute that demand comes back, that 4% goes out the window,
Yeah.
right?
Could be higher, a lot
Because
higher.
now, and I don't think that we'll see COVID type appreciation again. I really don't. But it's at least now it's going to be 6, 7, 8%. You could see that, right? And so
Yeah.
you could easily be paying $40,000 or $50,000 more for the same house if we hit that switch. And I think, and it's not going to be a night and day thing. I don't think, but we're going to gradually see it start picking up in this spring. And once, I've talked to a bunch of friends in the industry. I think once we're below that 6%, once we have something with a 5 in front of it, I think you're going to feel that market sentiment will make that shift, and we'll see a lot more buyers enter the market.
Yeah. Well, let's talk about how we could actually get into the fives, even with where the rates are today, whether it's, something that the buyer is doing or whether the seller is helping with. But let me bring this back on. I do want to talk about seasonality just real quickly here before we move on to that. And that is, when we went back to this chart, as I indicated earlier, the number of homes sold, certainly in our market. So you get back to, you have to consider micro markets and not macro markets, right? So,
Mhm.
for example, we have I'm working with some buyers that are buying in our market, selling in Florida. Their market, their hot season is January, February, March. So their market is hot right now, where ours is in the middle, kind of a winter, and not a lot of people are wanting to sell nor move. So the demand is low, which then creates a more of a buyer opportunity for you in the December, January, February timeframe. So I just wanted to articulate or communicate that buying kind of midwinter, if you want good deals, is going to be more likely than what you see here in the April, May, June, right? Because May, June, July, there's a lot of inventory moving, homes being bought, and you now have more, as a buyer, have more competition. So just
And
be aware of that.
that's just a normal market trend, right? That's not even taken into effect if the rates continue on their downward trend,
Yeah,
right?
this
That's just
this was a volatile interest rate year, um, that was fairly kind of normalized. If you project into 2026, and if rates go down, these sold numbers could shoot way up, and so
yeah.
will the average sold price, right? This is fairly consistent and just trending slightly upward. But if you wait
Hmm.
too long, 2026 could be a totally different story.
Right.
So let's see. I also wanted to just chat briefly about, for those that are, we've talked about this, but I really wanted to get a graphic up here about people saying interest rates are too high. What we need to take into account is it's relative, right? So in over 50 years of tracked mortgage rates, we're kind of in the mid sevens is our average. Our point of reference, our most recent point of reference, was kind of COVID interest rate numbers in the as low as twos, threes, fours. So the perception can be rates are high. And in reality, they're not. They've not only been higher, but much, much, much higher, right? This is kind of you and I's parents buying,
Right.
back in the 80s, early 90s. Uh, you know, Granted, home prices were lower, but my point is you've got to take into account kind of what the historical average is, not what the current rate is, when you try to determine whether you or not you think it's high or low. Hopefully I said that where it makes
Yeah, I
sense.
think I think that the generation that's buying now, right? They knew 2 and 3, right? That's what they knew.
Yeah.
And so understanding that that's not the norm is a little bit more difficult. The other thing that's difficult is the massive appreciation that we had right after COVID,
Yeah.
um, because incomes didn't keep up in a lot of areas with what the appreciation did.
Mm-hmm.
So I don't think it's more difficult to buy a house and maybe more difficult to buy in certain areas.
Yeah.
But overall, that goal of homeownership is 100% attainable by most people if they plan for it and pay attention. But yeah, the trends for interest rate we've seen way worse, and they'll continue to get better over time, I think, and people just have to adjust to that new norm. They just have to.
Yeah, well, I think you're touching on a good point here, and I want to delve into it a little bit deeper. Is what is your worldview? If I go back to this timeline here when our parents were buying, in the 80s and 90s, their worldview could be home ownership is so far out of reach, it doesn't make any sense. Why would I buy, close to the 20% interest rates, and get fixated on that thought and never buy? But it went down, right? Now you go the opposite direction, and like you said, that the new buyer's most recent kind of perspective is, wow, they were in the twos and the threes. Why would I ever pay, twice that in the way of interest rate? That seems kind of nuts. Well, um, yes, you'd like to be in the twos and threes, but it's never been there before,
No,
right?
no, and it hadn't been there before, um, and hopefully it doesn't go back. Like the people that have it, it's nice. Yeah, it's next to free money, but the chaos that it created in the market, now we're paying for, right?
Yeah.
And it'll be a long time before uh, we see that kind of correction. I don't know if you saw Chairman Powell's last talk after the last Fed meeting, but he talked specifically about the damage in the housing market and the instability that those low rates created.
Mm-hmm. Yeah. Yeah, it's going to take some time to recover from that. Again, inventory is not moving. I was blessed with getting into the twos, so you'd have to take a crowbar to get me out of here. I mean, it just doesn't make any sense. And even if I do want to, move into a larger home, smaller home, or whatever, I'm probably going to keep it as an investment property because the rates are so low.
Yeah, cash flow is much easier.
Yeah.
And then you still got, now you've created a tax write-off, it's still appreciating, so building your wealth. Yeah, and that's the way everybody's thinking, right? So um, yeah, it's something that we're going to have to work through, and the low inventory is probably the biggest factor in why I tell people, like, if you're ready, if financially, if you can afford a payment or you want to try, now is the time, because that demand, the minute the demand starts to come back, at that low inventory is gonna rear its ugly head again. So
Yeah. Yeah. So let's talk about that just a little bit. So if we're talking about timing, as best we can tell, post correction with downward trending rates, um, and we'll get into seller concessions, so the negotiating side of things, as it sits right now, early 2026, it's very buyer friendly.
yeah,
As the year progresses, as rates go down, demand's probably going to pick up. Inventory is going to get consumed probably at a faster rate than it can come online. So therefore, everything we're talking about, are going to be talking about in the way of negotiating price, concessions, things like that, terms, is going to get tougher to do. We don't know at what rate it's going to shift more towards the seller's market, but I think reasonably we can surmise that the buyer's strength is going to lessen over time, or conversely stated, that sellers market is going to begin to strengthen as time goes on.
yeah, yeah, 100%. And yeah, I don't know a specific rate. I say once we're solidly into the fives, that's kind of what I think. Realizing that right now you're at like 6 or 6 and an eighth conventionally, and FHA, and Govy loans like VA and USDA are in the fives, like five and three quarters, 5.6. And so, we're right there. We're lucky enough to know we're lucky enough that we really haven't seen a massive increase. And like as we sat here and talked, I had a client that just texted me his offer got accepted, and he offered 15,000 less, and only been on the market a couple days, right? And so those kinds of things right now, the opportunity is huge,
Yeah.
and so taking advantage of that is really important because the other thing is builders, right, have been giving concessions for how long now, eating into their profit margins.
Yeah.
You don't think they're going to get rid of that the minute that they feel
Right.
more comfortable?
Any strengthening is they're looking for reasons to pull those promos off, those concessions off. Yeah, let's talk about what those seller concessions promos look like. But real quick before we do, the timing I put in here is good because if you're self-employed and doing your tax returns, if you're you work lender works with your accountant, you're going to get updated returns, so that's going to help you buy. And then for some buyers, you're going to get maybe a decent return that you could put in towards a house. So I think there's something to be said for the timing of taking those tax returns, whether it's the return that you get monetarily or the filing. I think your timing is good. But let's chat about. So we've talked about why buyers are in a good position, and now what they can do with this good position. I think the normal take is, oh, I'm just going to ask for a lesser price, and that's such a limited view of what you can do as a buyer. It is an important thing because most people think price, but I think the biggest, almost more often beneficial way to go is to get a rate buy down, either from you as the buyer contributing to the purchase, contributing to the lender, or having the seller contribute money towards buying your rate down. So if you're in the sixes like we've been talking about, what we're saying is you can have a seller pay down your rate and get you into those fives.
Yeah, yeah, and that's the thing. It's we've done a lot of temporary buy downs to where you could buy it down a point or two for the first year or two, right? Permanent buy downs are becoming more and more feasible because we're still getting a decent amount of seller credits, and but now where rates have moved down, now we can get you, like with a permanent buy down, we can get you pretty solidly into the fives, and so it's much more beneficial at this point in time than it has been over the past couple of years. And so, to talk about that client of mine, do I think getting 15,000 off the purchase price was the best move? Probably not. You know what I mean? Because but it depends on your personal situation, what affordability is, right? Affordability is our real issue, and how can we make it more affordable to you? I don't want to become, feel like a car salesman, and well, what payment do you want, right? But it really comes down to, it's so much different because this is an appreciating asset, not a depreciating asset, and you being able to afford a payment, right, and not sacrifice everything to get in a home for your family.
Yeah.
We can get that payment to where you're a little more comfortable now, but now you're in a home that's going to appreciate at minimum 4% every year.
Yeah. Yeah. Well, let's talk about what you just touched on a little bit greater detail. So if you have a lender and an agent that's working closely together, talking about the holistic view of your buyer's position, you and I would talk about, hey, before I submit this offer, is the best thing to do to negotiate the 15K off, or is it, let's just say it's going to cost 15K to buy down, I don't know what, conservatively half a point. I'm just throwing out round numbers here, right? So maybe offering the same amount, but having the seller pay to buy down your rate. Now you've got, however many years, let's just say it's a 30-year mortgage, or let's just say maybe you're only going to keep it for 10 years. I don't know, but you're going to save a lot more than the 15K that you reduce the price of the home in paying less interest over that, let's just say 10 years. So maybe that makes more sense. And again, that can either be done by you coming out of pocket as a buyer or your seller contributing to it. But what I'm saying is it's an opportunity in time right now to negotiate these things.
Yes.
But then I'm
Yeah.
also stating it's good for you, like you know, the agents and the lenders that are working in the market today to best position the offer for the buyer.
Yes, and that's the key, right? Like it is that holistic financial view. What's best for you? What puts you in the best position? Maybe getting 15,000 or 20,000 or 25,000 off the purchase price is the best thing, right? The monthly payment isn't as big a deal for you. Maybe it is a really big deal with where rates are at, which we see a lot these days, right? So how do we mitigate that so that you're not, house poor, but you're still now in a home, not paying rent, and an asset that's building you long term wealth.
Yeah, yeah, absolutely. And then let's talk about negotiating the closing cost, right? We've talked about price reduction. We've talked about contributing to interest rate buy down. Um, I don't know. I'm just going to, is it fair to throw around, 10, 15K for closing costs, just kind of rough numbers?
Yeah, yeah, somewhere in between there. I mean that would include probably a little bit of discount if needed. So yeah,
Okay, well,
that's
let's just use 15 because that's the same number we had in the price reduction, right? So we've either asked the seller to reduce their price or to give them a credit at closing. So basically, net, they paid 15 grand. That's the asking price. The asking price is probably based upon the fair market value if their listing agent did their job right. They looked out um, at the comps in the market and said, "This is the value of your home." Let's just say it's a $500,000 home. So now you've bought a $500,000 home for 485, right? Because you negotiated 15,000 somewhere. So now you have 15K in equity in a home because it's, market value is 500. And we've
mm-hmm.
talked about the fact that it's probably going to go up pretty easily, 3, 4, 5%. And that's not assuming that what we think is going to happen because those numbers could be bigger, and potentially significantly bigger. But anyway, the other option is, hey, can you help pay my closing costs for me as a buyer? Because I don't either have the 15K for closing costs, which means I'm not going to be able to buy, right? So
Right.
you've either now have an opportunity to buy, which you didn't, a few months ago, or you won't have in a few months in the future, right? Because you can't just materialize $15,000 in closing costs sometimes. Sometimes you can. You know, there's ways to do that. But what I'm saying is to get it from the seller is generally speaking the easier way to do that. So now you've minimized your out-of-pocket expense, right? And I think you just kind of alluded to that earlier. What do you want to do with 15K? Do you want it in a reserve account? Do you want it in a retirement account? Do you want it to help with some of the things you're going to need for your new home, right? Your refrigerator, your washer, your dryer. So, or a combination of some of that. Buy down the rate, help with closing costs,
It,
reduce price.
there's so many different things that go into that, right? Like we could dig so deep into this. I just got off a call with the owner of our company. We're talking, investments and things like that, and how people approach homes. Dude, wealthy people very rarely, use their own money to buy houses, right?
Right.
They get a mortgage. The stock market, you're average 7 to 10% a year, and you have people that aren't maxing out their 401ks and taking advantage of that, right? And so now, like if we can get you a lower payment, right? Not using your cash in your savings or money that you could invest, we can get you a lower payment using the seller's money or a seller's contribution,
Yeah.
right? Now you have the ability to maybe, invest into your 401k or to, stocks or whatever to build retirement. Um, yeah, there's just it can really change the outlook for a family and for their long-term wealth building, with, this kind of planning ahead.
Yeah. 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 And we want to contrast this with what if you don't have this leverage, these negotiating options, right? Let's say that it's becoming a stronger seller market. They're not interested in buying down your rate because they don't have to. They're not interested in giving money towards your closing costs because they don't have to. They're not interested in dropping price. So therefore, you got to look at kind of a lesser home. So
Yeah.
we're just saying, as it sits today, yes, there has been stronger or more opportunities in the past as a buyer to buy a home, but not many. I mean, in 20 years, there's probably been, you know, a single digit amount of times that I've seen buyers have this type of negotiating power.
Right. And I think I want to. We've been here a long time, right? Like we're not new to the area. Um, and the reality is that yeah, it sucks. Like we're with you. Like we're not trying to just sugarcoat
Right.
everything. But
Right.
where home prices are, it sucks.
Yeah.
It's definitely harder. It's not what we're used to here,
Yeah.
right? But it's a great place to live, and a lot of people want to live here. Um, and quite frankly, if we all want to make more money and do all of these things, we need the growth in our communities.
Yeah.
So you have to deal with the good and the bad, right? And so yeah, like I don't want to sugarcoat it and say everybody should buy now. No, the people that can afford to buy should buy now.
Yeah. Well, I think
That's
that's a good thing to kind of re-bring up, represent, and it goes back to the worldview side of things. I've been here for 30 plus years. You've been here for, basically your whole life, 30 some years. Sorry, insert funny
Thank
here.
you.
um,
No gray hair.
yeah, I shaved mine off. It was getting too bad. Um, but my point is, relative to where we were, certainly when I got here, right? I bought my first home here in '97 for under $100,000.
Yeah.
Yeah. There's no way I'm going to do that again. And yes, it could be frustrating to say, look what home values have done. Look what the relocation um, history has done. People moving into the areas and our values have come up. Yes, relatively speaking, it all sucks. That's been time. That's been interest in our market, and values have gone up. Don't quite know what to say about that. But if you fixate on what it used to be and frustrated about where it is, you're not going to be a homeowner. If you shift it and say, look, out of relatively current time in history, this is an opportunity for me to do some negotiating, bring down the price a little bit, or minimize out of pocket, or get a good rate, or potentially even all the above. Okay, I can feel good about buying a home. In 10, 15 years, I'll have the same frustration that if I didn't buy as I did, so looking back on, hey, I could have bought a home, for under
Yeah.
$100,000 back in the day.
Yeah, and it'll be worse, right? And that's the
Yeah.
decision, right? So it's if you can afford it, right? If your family can afford it now's the time to go, because for these times there are a lot of factors on your side as a home buyer,
Yeah.
right?
Yeah.
And from this point on, you can be building wealth and gaining the equity and the appreciation that we're going to see over the next 10 years.
Yeah.
Or you can sit on the sidelines and mope and bitch and moan about it,
Yeah.
and then still be in the same position.
Yeah. Yeah. And there's really, I don't think many could straight faced argue that values aren't going to continue to go up, certainly not in our market, because we have no reason to think demand is going to back off much, if at all. It likely increase because we're a growing market. So there's really not a whole lot of argument to be had that we're going to drop in price or correct any more than we already are. So this is kind of the best time that you're going to get going forward, realistically, as best we can tell.
Yeah, yeah, absolutely. I think now is the time, and for the times we're in, I guess is the easiest way to put it.
Right, right, right. Yeah, let's try to wind this down a little bit with the last kind of piece of information here. So one of the things we haven't talked about is how builders, yes, they can contribute in the ways that we've talked about thus far, but they're also open to, helping put in the backyard, right? The sprinkler system, the sod, the whatever, landscaping. They're often open to things that you don't normally get with a new construction home: refrigerator, washer, dryer, blinds. So, just being honest, those are not cheap things. But if you can get a builder to include it, again, I don't know if you can get all of them. Builders don't often want to reduce price because it adjusts their comps. So that's
Yep.
not usually where you want to approach them. They're very open to buying down the rate because it doesn't adjust their pricing, but
Currently,
it
yeah,
helps you buy, and by the way, buy more.
yeah.
They're currently often open to contributing to closing costs, and now you can almost get turnkey. There's literally promotions from the builders called turnkey, or um, you know, um, uh, what's the words I'm looking for? Kind of buyer move-in ready is a
Mhm.
term, and
Yeah.
which means the yard, the blinds, the appliances, where normally you're going to have to go purchase that stuff kind of after the fact.
Mhm.
So
Yep, absolutely. Yeah, there's a lot of ways to use the incentives in your favor. So that's why I just want to sit down with us and figure out what is the best move for you.
yeah, yeah, absolutely. So we want to talk through all those things. Again, not being able to take into account your personal situation. So that's the caveat here, right? But if you can, there's a lot of incentive to do it.
Yep.
And I think if people miss the fact that any downward pricing is probably a thing of the past, any hope that if rates go down is a little misguided, because demand can pick up just as fast, and subsequently values is really what we wanted to get across today. So leverage timing in getting incentives or concessions for buying your home. Anyway,
Absolutely.
whew.
Lots of good things happening right now.
Yeah, that's right. That's right. So, and as things change, if you look at this, watch this podcast here, and a month from now, 2 months from now, 6 months from now, whatever, just reach out to us and we can talk about, what's moved, what hasn't moved. Has it moved in the right direction? Has it moved in the bad direction for you as a buyer, or anywhere in between? So we'd love to have those conversations. So,
Absolutely.
well, very cool. Well, as always, Chase, we appreciate you coming on, chatting with us on the lending side, the market side, the former Mr. Appraiser side, because you have insight into a lot of that. So we
It's a lot of
sincerely
fun.
appreciate all that.
Yeah, it's a lot of fun. Appreciate you having me on.
Yeah, absolutely. Other than that, guys, we'll wish everybody a blessed one. Take care.